Thanks for joining. Hopefully you can all see me and hear me okay. Webinar we've got today, probably looking at about 25, 30 minutes, and we're looking at how healthy are your finances and tips to make them better. A little bit broad in terms of a title or strapline, but really what we're looking at is how to structure your business, different structures that you may have, pros and cons of each, different taxes that you may be paying if you're self-employed, and then how Crunch as a business may fit into that puzzle and how we can help you out a little bit. So my name's Ben. I'm the sales manager here at Crunch Accounting. I've been with the business about 5 years. So my team are responsible for bringing on every new client that we've got and talking them through all these things that we're going to be talking about today. So we do that by way of consultations. So, 15, 20-minute consultations with every new client, making sure that we're getting the best for them, their business, giving them some advice up front, and then, sending them on through the business and handling their accounts on an ongoing basis. So my team literally have thousands of conversations a month. So hopefully I can impart some of that experience that I've had over my time with Crunch onto you guys today a little bit anyway. So a little bit about Crunch, I think, before we start. Let's paint the picture of where we've come from and why we're able or really well positioned to be able to help. So it all started with our CEO, our fearless leader, Darren Fell. Back in 2007, he was running a email marketing business called Pure 360. And at the time, obviously, he had a very much traditional accountancy setup where he had to schedule meetings and had lack of visibility, I suppose, on his accounts. So one of the first main issues that Darren wanted to tackle in this space was the lack of readily available information that there was out there for freelancers, entrepreneurs, self-employed people. So in 2008, Darren launched what was then called Freelance Advisor, which was an online resource just of information, of idea sharing place for entrepreneurs and self-employed people, which then turned into Crunch in 2009. So about 10 years ago now, 10 years this year. At the time, we were one of the first in the country, the first online accountancy software and service providers, so marrying the software and service elements together. And over time, I think this month we're pushing towards 11,000 active clients, and we're a top 100 accountancy firm across all sectors. So in terms of what we do, we're very much experienced and have a really good background. So what Crunch does is wherever you may be on your journey of being self-employed, be that just starting out and doing a little bit of work on the side, needing personal tax affairs taken care of, whether you're more of a full-time contractor or a consultant that's working to a day rate, more full-time contracting, you need to set up a limited company, we can handle all of that work, all the way through to small and medium growing businesses. So people maybe that have moved on from that individual contractor space to a more established agency, for example. We can handle up to 49 employees, handling payroll, bookkeeping, all that type of thing. So wherever you are on that journey, we're definitely able to help you with the right service and advice here at Crunch. So like I said to you at the start, we've got about 11,000 clients, but we've helped literally tens of thousands of people that are self-employed, be that with advice on business structure, advice on how to pay themselves, all these types of things. We've got a huge bank of resources that anyone can tap into. And just to give you a bit of insight into how much that is tapped into, in March of this year alone, we had best part of 500,000 visits to our articles and our guides. I think last year we had over 3 million visits to our knowledge section of our website. So it's pretty well used and pretty well liked in the industry. So I think where are you in your business journey is probably a good place to start when we think about the meat of the webinar. So my team and myself get asked this first question a lot. It's probably the most common question that we get asked. So this is my situation. Should I be a sole trader or should I be a limited company? Now, there's no real right or wrong answer to that question. There are pros and cons for each. It's really not black and white, but it is all very much dependent on what your motivators are. Are you more money motivated, or are you more ease of accounts motivated? Do you want something that is more credible and more professional, or do you want something that is, like I say, a bit easier to maintain from your perspective? So you need to think about flexibility. So do you want to have flexibility in terms of how you manage the money that you're pulling out of your business? What kind of protection do you want to give yourself? Do you want to put your client at a little bit more arm's length and have something that sits between you and your client, or are you happy to engage with them directly on a sole trader basis? Another one we think about is, what are your future plans? So what is your plans for the next 3 months, 6 months, 12 months, beyond? Where are you going, and what are your intentions with this business that you've got? Is it just going to be a short-term thing, or is this going to be a career choice that you have made, and then you're going to be moved into the self-employed sphere? You need to think about the types of clients that you're going to be engaging with. So are these people that you're engaging with personally, or are they bigger, larger companies that have some type of agency or intermediary that sits between them? There's also something to consider, which is called IR35, which can further add complexity to your choice. But really it comes down to a few things. How much are you earning? What motivates you? Do you want something that's easy to set up, or do you want something that is going to yield you a little bit more money over time? And again, you can give us a call in the office, and we can answer all these questions for you. One thing that I will say is, actually at the end, we're going to answer hopefully a few questions that have already been sent through to us before the webinar. But if you've got anything that you want to ask, I think you should be able to type it into the question section of the webinar. So get those questions in, and I can do my best to answer them live at the end. When you're thinking about sole trader or limited company, there's a few things there's a few areas where they're different. So we need to think about what taxes you're going to be paying, how to extract money out of your business. So how are you going to pay yourself? Administration weight. So what administration do you need to do on both? And then what expenses can I claim? So first and foremost, we need to think about tax. So what tax do you pay as a sole trader and limited company? Now, sole traders pay income tax and national insurance based off your company profit. So the more that your business earns, the more and ever increasing rate of income tax and national insurance you'll pay. Also, you pay VAT if you exceed the turnover threshold of £85,000. At that point, you must register for VAT and charge and pay VAT as well. Limited company is ever so slightly different, whereby you'll pay a flat 19% on your business profits. That's called corporation tax. And then you'll pay income tax on the money which you pull out of the business. So this is where we touched on at the beginning, the flexibility piece. You can be a little bit more savvy with how and when you pull money out of the business, and therefore when you're going to feel that income tax based on the dividends that you withdraw. You also have to pay VAT. So VAT is going to be the same on both in terms of the threshold. That's £85,000 of turnover in any rolling 12-month period. You'd need to register for VAT. Now, this can lead to two different take-home pays in two similar situations. So what I've got here is a little bit of a calculation. So on the left, we've got profits of a business of £24,000, and then on the right, profits of a business at £55,000. So you can see on the left, bottom line, there's very little difference in terms of what you take home with a profit of £24,000, be you limited or be you sole trader. Limited is going to have more administration weight to filing your account. So in the first situation, you're probably going to want to consider just operating as a sole trader. Now, as your profits increase, on the right-hand side of this chart, you can see down the bottom line that the saving that you would get based on being a limited company is much more. There's a number of factors that go into that. You don't pay national insurance as a limited company because you're paying yourself a salary up to the national insurance threshold, and corporation tax is at a more advantageous rate at 19% rather than your increasing profits taxes on sole trader. Now, everyone's situation is unique. What I generally tend to advise, if you're going to be turning over about 35, 40,000 pounds through your business, that's usually the tipping point when you're going to start to see limited company coming out in terms of a strictly bottom line financial comparison being better. Anything below that, it's 6 and 2 3s really. So again, get in touch with one of us in the office and we can talk you through your own personal situation and give you some kind of calculation to see what you think is going to be best for you. So administration, when you are a sole trader, there's a few things you need to do. Now, generally speaking, the administration is much lighter, it's much easier. There's less tax returns that you need to do as a sole trader. So for people that want to keep things really simple, it can be a good way to go. So what you need to do is register as self-employed with HMRC. What that means is they're going to expect a personal tax return from you yearly. That's called your self-assessment. There's no real accounts that you need to file, but it is best to maintain good kind of digital records. So there's an adage that we tend to use here with accounting and software that it's best to do something little and often rather than leave yourself with a big job to do once a year. Making tax digital is something that you may have seen if you pay close attention to taxes, but from this month, VAT returns must be submitted digitally to HMRC. So that's the way that things are going to go, meaning that you must have some kind of digital software where you are keeping records. Administration for a limited company is a little bit more, it's a little bit heavier. You have more responsibilities as a director of your own business. So you're going to need to file statutory accounts both to HMRC and Companies House. HMRC will expect a corporation tax return. There's a confirmation statement which needs to be filed, which really just updates company houses on any changes within the business. So things like shareholding changes, share allocation, directors, addresses, things like that. That needs to be updated once a year. There's a P11D, which declares your company benefits, which may require to be taxed. You still need to file a self-assessment as well, and you're going to need to set up salary and dividend payments. Now, that does sound like a lot of work, but that is all work which an accountancy firm like Crunch would take away from you and help you stay on top of, through support here in the office and the software which we obviously provide. But they are very different in terms of responsibilities, limited having more responsibility and sole trader having less. It's also much easier to start out as a sole trader and move up to a limited company rather than the other way around, rather than starting limited and if it doesn't work, scale back. So if it's something that you want to test the water with and scale up, then sole trader to limited is definitely the natural progression in terms of way to go. Now, expenses that you can claim, this is, again, one of the main questions that we have. For both expenses for sole traders and limited, the main thing that you need to think about is it needs to be wholly and exclusively for the operation of your business. So if you need to buy a new laptop, it needs to be exclusively for the operation of your business. So long as you can prove that the expenses is for the operation of your business and just for the operation of your business and doesn't really have any dual purpose, then you should be able to claim it. Obviously, you need to have proof of purchase as well, so a receipt. So more limited company specific ones, business mileage is very easy to claim. If you've got a company car, that can be a good thing to run through a business. We've got travel expenses here. There's a 24-month rule, which means you can only claim them at one site for 24 months. You've also got the ability to claim things like a company mobile phone, that type of thing. When you're a sole trader, you do have a little bit more flexibility about claiming working from home expenses, but your travel expenses can be a little bit more restrictive. So again, we've got a whole vast array of resources, and I can give you some links at the end of this webinar, which you can all take away and do a bit of reading in your own time and get a little bit more of a flavor of what is claimable on both. But expenses drive down your profit, therefore lower your tax. So a few loose tips. You're going to need to keep some kind of digital record for at least 6 years, whatever way it is that you go. So if you were to be investigated by HMRC, you need to be able to provide proof of things like expenses, accounts, income, all that type of thing. So make sure that you have got some kind of digital record and you're keeping it well beyond the end of a year. You need to be recording all of your invoices and all of your expenses. That's how you determine your profit, money coming in, less money going out. One of the big ones that people generally fail to do initially is get a business bank account. So get some kind of separate bank account, be you sole trader or limited, that is distinctly separate from your personal transactions. It's just going to make your accounting life a whole lot easier to know that everything that is in said business bank account relates exclusively to the operation of your business. It will save you a whole stack of time in the long run. Setting aside enough tax. Now, again, this is a question we get all the time. For a sole trader, it really depends on what you're earning, depends on how much you pay in tax. So what we've got is a personal tax estimator, which everyone can download and keep personally and plug in all of their data. And I'll tell you exactly how much personal tax that you need to keep aside. You can use that live. Everyone can use that. Also, if you're going to be engaging with people long term, you need to give some consideration to contracts. I mentioned IR35 at the start and also your potential employment status. So at a very high level, IR35 is legislation which has been introduced to try and stop people that should be employees forming a company to avoid paying the tax of an employee. So as an example, it would stop me from coming to work tomorrow and saying to Crunch, right, I'm going to be a sales consultant or contractor now, but really my job hasn't changed. Everyone that I work with is still employed. My benefits are still very similar, but the only thing that has changed is the amount of tax which I pay, being less than those of my employed colleagues. So I would have to pay equivalent national insurance and income tax of an employee, even though I am running through the business as a contractor. So again, it is a really hot topic in the industry at the moment. Any questions on that, get them in and we can try and answer them for you, or give us a call in the office. The guys are all really well versed in all things IR35. So in summary, there's a few differences between operating as a sole trader and operating a limited company. So paying yourself, a sole trader, you're going to pay yourself directly from your trading profit. So you just pull money out of the business and you pay tax on the profits before you pull that money out. As a limited company, you're going to pay yourself a low salary and then you're going to take the rest via dividends. That's good for being able to, because you only pay tax on dividends when they're physically pulled out of the business. Administration, sole trader is much easier to set up and shut down. There's one return you have to do, your personal tax return or your self-assessment. Administration on a limited company is a little bit more inclusive. So you've got statutory filings that need to go to HMRC and Companies House, etc. Again, we take that type of work off you. With a sole trader, expenses, there's no benefits in kind, so you can't pay company car tax. So there's just more particularly travel expenses are more restrictive as a sole trader. As a limited company, you do have travel expenses are more open to you, as well as things like company cars, mobile phones, etc. And taxes that you pay. As a sole trader, you pay income tax, national insurance, and VAT if you were to be registered. As a limited company, you pay corporation tax on your profit, and then income tax on the dividends that you pull out of the business, as well as VAT if you were to be registered. Now, before we get to some of the questions which have been pre-submitted to us, and any more which may be coming in, Crunch is more than just an accountancy practice. That's where the vast majority of our business is done. But we also do mortgages for those people that may be self-employed. We do business insurance to cover you for things like professional indemnity and public liability, and we also offer advice on pensions and investments for people that are looking to manage their wealth. So I'm going to nip over and have a look at some of the questions which hopefully have been submitted before the webinar and anything that may be coming in. There's one here: when's the best time to register my company? I'm not trading yet, but I plan to this year. It's really up to you. Now, it depends on what type of work you're doing and how much you want to lock down that name. If the name is something that you are really particular about, you may want to register now, and your company can be dormant. You don't have to file any accounts per se. You can do that straight away. Or if you're just going to be a contractor maybe, and you're less inclined to have a really particular name, then I would probably wait until you're closer to the earning time. So if you're a contractor, I generally say leave a couple of weeks before you start earning to be able to get all this stuff set up, business bank account, insurance, all that type of thing, company formed. A couple of weeks is a pretty safe margin, so you can start work and not have to worry about getting all this stuff set up as well. I think there was a question that came in before the webinar about how do I set up a limited company. It's actually quite simple, surprisingly simple. I found when I first started in the industry is that we can help you with it. We've got a website called Go Limited where you can set your company up. It'll take you probably about 15 minutes, 20 minutes to fill in the forms. There's a small fee, and then the company is active probably about 24 hours after you submit that form. So it is actually really simple. We can help you with it, or you can do it yourself directly with Company's House or Go Limited. Right, we've got here, can we claim expenses for things, can we claim expenses that are things that are business related but we still enjoy? Theatre tickets, gig tickets, if we are arts based for research purposes. Potentially, again, like I said at the expenses section, you would need to be able to argue the fact that this is purely based for research purposes. If it was for entertainment, for a client outing to, try and win over a potential new client, probably not, because it's an entertainment. But if you are really doing research and you need to go and see a performance in order to establish someone's suitability for, interacting with you as a business, then potentially there would be an argument there. But I'd say, yeah, you'd want to talk it through with maybe an accountant or one of us here in the office. That's kind of a potentially, depends what industry you're really in. How do I estimate my income or turnover? That's a tough one. So you really need to think about, if you're a contractor, what's your day rate? Multiply that by 5 days a week, however many days you may be working, and then extrapolate that out over a year. Usually we do it over about 48 weeks to give you a turnover figure. It can be more difficult if the work is more sporadic, but hand on heart, it is a bit of a finger in the air and a bit of a best guess kind of figure. But yeah, if you've got a day rate weekly, move that out to yearly. How do I negotiate a wage and what rates do I charge? Crunch's website has a day rate estimator. Now that's not based on skill, that's not based on industry, that's not based on anything like that. It really just shows you what contractors as a whole are charging within your area around the country. That's probably one that if you're engaging with like-minded people, it's just best to do your own research. But yeah, that's a difficult one to answer. What should I be saving per month? We've got a personal tax estimator, which we will link to after this to help you guys estimate what personal tax you may owe at any point. Is there no minimum amount a limited business has to make before it has to pay tax? No. If your profit is £10, you would pay corporation tax on that £10 at 19%. If you earn £100,000, you pay 19% on that £100,000 of profit. So that's where it can be more advantageous for people that are earning at a higher rate rather than at a lower rate. But yeah, the corporation tax rate is flat at 19% on all profits. What else we got here? Got a few more. I currently use PayPal for receiving payments. Is there anything better as the business grows? There's a whole load of payment gateways, I suppose, that people tend to use. PayPal is a big one. We've also got a lot of people that use things like Stripe, Go Cardless, Shopify, that type of thing. But they're all very good and all very reputable. Someone's using one of the big players in their game. They are literally multi-million-pound businesses. So all of them are really good. Just find what you're looking for, and there's pros to each of them. What else have we got here? When should I be filing financial years? So personal tax year runs from 6th of April is the start, runs through the 5th of April every year. So we're rapidly approaching the end of the financial year. If you're a sole trader, you need to declare all of that income for that period, April to April. By the following January 31st, you need to submit, file, and pay your personal tax return by the end of January the following year. If you've got a limited company, you've still got that personal tax year, but you'd have a company year which would run from when you incorporate through 12 months. So you'd have potentially have 2 years. So if you wanted to line them up as a limited company and a personal tax year, then now would be the time to do it. What other things do we have here? Can Crunch help me determine what I should operate as limited sole trader, etc.? Yes, 100%. That's what my team are here to do. We're on hand to answer all of your questions and give you a little bit of feedback, personal feedback about how we can help you. What else we got here? Yes. Is it okay to claim for a monthly travel card if I buy it for convenience to travel around London, but I'm not going to be using it on a daily basis? Again, if the travel card is going to be used wholly and exclusively for the operation of your business, then yes, but it needs to be to a permanent place of work. That's a bit of a more of a nuanced one. So yeah, get in touch with us. We can talk you through the situation. So there's a question around IR35. So is an IR35 for an employer or for us as sole traders or limited companies? And what do you classify as being a long-term contract, nine months maybe? So IR35 is really not black and white. It's really based on how you interact with your client. Do you have things in your contract like right to substitution? Do you have things like you need to provide your own business insurance? Is it a set period that you are contracting for? All these types of things move you kind of one way or the other up the sliding scale. What we can do is we can review your contract for you in-house and give you some feedback about what may need to change in your contract and what how you can interact with your client slightly differently to put you less at risk. Now at the moment, if you're working in the private sector, your IR35 status is determined by you as the director of your limited company. IR35 doesn't apply to sole traders, it applies to limited companies exclusively. And that's determined by you. So you determine whether you are inside or outside up until the point at which you may be investigated. From April 2020, in the private sector, there are some changes that are going to be coming down the pipe for IR35, where that who determines your IR35 status is going to move to your employer, your clients, your end clients. They determine your IR35 status. If the client is either medium or large in scope, there's a whole raft of rules around what determines a medium or large client. And if you work for a small client, it'll still be down to you. So yeah, I think at the moment, you determine your IR35 status from April 2020. That will be down to your employer to determine that, potentially. What is a simple way to manage your business finances? Best thing that you can do is the business bank account. business bank account. So you're separating out your personal transactions from your business transactions. So if you need to move any money over to yourself personally, you move that out of the business account into you personally, either by dividends or just straight transfer if you're a sole trader. Software is going to be the best thing. I mean, visibility is the main thing that you want to have with your business finances. So the more that you can see, the more that you can preempt what's coming. And it just gives you better visibility on what is in there and what may be coming up. Using a personal tax estimator, so you can forward plan what you owe come the end of the year. I think that's the biggest one for people, is they don't kind of realize what taxes they may owe, and it comes as a shock come year end. So yeah, so software, so you got visibility, bank account, so you know where personal transactions from business, and yeah, some kind of estimator or something like that. I think that potentially covers all of our questions. So what is an affordable finance software to use? If we're thinking about accountancy software, which doubles as a finance management tool, I suppose. I mean, I'm biased, but I think you'll probably find it hard pressed to find a better affordable solution than Crunch for both sole traders and limited companies, because we've got software as well as service as well, tacked into your monthly subscription. But there are a number of different things out there. There are a number of different softwares out there that all kind of do very much a similar thing, and they're all kind of priced in around the same price. But where we differentiate from them is that we've got a service element, human element, and filing element that is attached to software as well. I think that probably rounds us off nicely. So hopefully everybody was able to see and hear me the whole time. If not, we're going to send out a copy of the webinar to everyone via email that has registered. And if you've got any questions whatsoever, if you want to speak to me direct, just give us a call in the office. My guys are on hand, and I'm on hand to answer all of your questions as and when you need. And if we don't know the answer, we will find you the answer. There's no better place to go for a bit of free advice. And on that note, we also have what is called Crunch Chorus. So that's where we house all of our free information. So you get access to webinars, the guides, and blog posts, which you spoke about earlier on. We do regular meetups, all sorts of stuff that you can get, including free invoicing tools. It's all there for free. So log on to crunch.co.uk/chorus and sign up. But for all of us here, that's thank you for joining, guys, and hopefully we see you all again next time. Thanks. Bye.